Hello and welcome to analysis session week 14. We are about to embark on a new trading month, the month of April, and the markets have a lot in store for us. Starting off, daylight saving time shift, whereby from tomorrow, London is going to open at 9 a.m. local East African time. Moving on to the first trading week of the month, you know what it is, non-farm payroll, whereby we do anticipate the jobs number coming out at exactly 3:30 p.m. this coming Friday. Now, looking at the forecast, we are anticipating 139,000 jobs compared to the previous number of 151,000 jobs, which is slightly negative, but this is just the forecast. So if the number comes out higher than 139,000 jobs, it means that the economy is relatively doing well. Now, we anticipate the unemployment rate to remain constant at 4.1% and the average hourly earnings at 0.3%. But the highlight of the day, apart from the non-farm payroll, is going to be the speech from the Fed Chair Jerome, who is going to speak at in Arlington. The most amount of volatility that we do anticipate in the marketplace usually comes from the audience questions expected. This is whereby Jerome Powell is going to be grilled. What do you feel about the relative economic outlook in the United States? Then closing it off on Saturday, whereby we are going to have a final shift of daylight saving times for our people in the eastern side of the world. Now, moving on to geopolitical factors, Trump wants Greenland. And he doubles down on Greenland takeover 100%. This guy is very confident that they are going to take over the largest island in the world. Now, Donald Trump once again declared that the US will get Greenland, insisting nothing is off the table when it comes to acquiring the self governing Danish territory. Now, this started back in 2019. And despite clear opposition from Greenlanders, Trump remains determined. Now, Greenland, mentioned, is the world's largest island, sits between the Arctic and the Atlantic Oceans, and is home to around 57,000 people. It's very rich in natural resources and positioned along key emerging trading routes. It holds significant geopolitical appeal through its premier Mute Igede has made it clear that Greenlanders don't want to be Americans. On March 28, the Vice President J.D. Vance and senior U.S. officials visited an American military base in Greenland, with Vance acknowledging that the issue is only going to get bigger. The following day, in an interview with NBC, Trump stated with confidence, "We'll get Greenland. Yes, sir, 100%. Good possibility that we could do it without military force," meaning there's a possibility they might, before adding, "I don't want to take anything off the table." He justified his stance by citing security concerns. Now, this is from Trump. "You have ships sailing outside Greenland from Russia, from China, and from many other places, and we are not going to allow things to happen that are going to hurt the world or the United States." Meanwhile, during his visit, the vice president took aim at Denmark, accusing it of neglecting Greenland. Our message to Denmark is very simple. This is from the Vice President. "You have not done a good job by the people of Greenland," he said. "You have underinvested in the people of Greenland and in the security architecture of this incredible, beautiful landmass filled with incredible people that has to change." Vance went on to predict that Greenland would ultimately align with the US, promising that American involvement would bring much more security and economic benefits. However, Denmark's foreign minister, Lars Rasmussen, pushed back, calling out the Trump administration's approach. But let me be honest, we do not appreciate the tone in which this is being delivered. This is not how you speak to your close allies, but he still considers Denmark and the United States to be close allies. We'll want to see what will this have on the market. What impact will this have? Because he's very certain. Yes, he's mentioning about it's not a must to use military, but if military has been mentioned, then it means that there's a possibility he's looking at that option. Now, moving on to taking you back to last week, Trump did impose 25% tariffs on automobiles coming into the United States last week. If you look at retail sales that was released on the 17th of March, automotive sales did take a very big dip, very, very huge dip. Trump decided to impose a 25% tariff, meaning any vehicle coming into the United States is going to pay 25% more. Now, this is going to be bad for people like South Korea, China, and Japan, but to the American automobile makers, people like Tesla, Ford, and so on, it's going to create a marketplace whereby their own vehicles are going to be cheaper. Mexico, followed by South Korea, then Japan, are the largest exporters of vehicles into the United States of America. So if Trump imposes these tariffs, yes, it's going to hurt these people. It's going to affect Toyota. It's going to affect Honda. It's going to affect a lot of companies. But he believes that if we do impose these tariffs, it means the vehicles being produced in the United States are going to find a marketplace in the United States. Moving on to commitment of traders, from 18th March 2025 to 25th March 2025, we did see at least 7,000 long positions being offloaded from the market and only 1,728 positions being added to the market. Now, if you look at the charts, this is gold. Within that time frame, prices were consolidating, but the moment Trump did speak about tariffs, the market did shoot to the upper side, whereby the index went and made all-time highs. Gold did make all-time highs after the speech for Donald Trump, whereby he did gain at least 2.51% off. Moving on to GBP USD, we did get a beautiful sell last week. This week, I would want to go down to the 1 hour time frame, not the 2 hours, but the H1 time frame. Now, there's a region here of importance that I want to point out. We do have relatively equal lows with the markets. Now, this is something I usually pay close attention to. Whenever the market presents equal lows, this means that there's liquidity residing below this region here at 1.29225. As a trader, I would want to see how the markets react to that region. But the most probable scenario is I would want to anticipate prices coming back down here. So I have a buy limit just at that region, having a stop loss of around 30 pips and a take profit of around 70 pips. Now, this is a risk to reward ratio of 1 is to 2.25, which is very, very, very enticing for me to take. Moving on to Euro USD, not a lot is happening, and I would want to stay clear of Euro dollar for this week. Moving back to United States, now US 30, the Dow Jones Index, we did see the market opening with a gap over the weekend around this region here, whereby the markets aggressively started pushing below that region, and we actually closed below the gap that opened last week, Monday. For me, this is a very vital sign that yes, investors are very skeptical about what's happening in the marketplace currently at the moment. And could this signal further momentum to the downside? Yes, we do have relatively equal lows at around this region here at 41,429, and as you can see, the market closed to the T on that region. So when the market opens up in the next few hours, I would want to see how the market reacts to that region. If we do close below this region, then it will give me further confidence that yes, there's a very high possibility that we might go back down to 40,685. But there's only one way to find out, and my speculation is going to be a sell position around that region there. My stop loss is going to be just above these highs, and TP1 is going to be 4,226, but I'm willing to take this trade down to 40,685. Now, this is a risk to reward ratio of 1 is to 4, which is very, very enticing for me to take. Now, moving on to NASDAQ. Same thing happened. Now, NASDAQ and Dow Jones positively correlated. They are brothers and sisters. When one moves to the upper side, the other one usually follows suit. We can see the market did open with a gap, and the markets came back down, fulfilled that gap, but when the tariffs did come in, the market perceived that information very negative, and we did see a very massive sell-off of nearly 4% of the index. Now, this is very, very crucial for us traders. The same analysis is going to apply, whereby I would want to see the markets coming back up slightly a bit for further continuations to the downside. If I was to pull up a Fibonacci from this high to this low, the region coincides perfectly with the 61% and the 50% retracement region, whereby I would anticipate the market coming back here. Stop loss just above this region, and I'll be targeting these lows for a risk to reward ratio of 1:2.24. Moving on to US 500. Same analysis. I won't want to execute a position on this because I do believe that US 30 and US 100 tend to behave much more better in terms of analysis because you're dealing with fewer companies. If you look at US 30, this is the top 30 companies. If you look at US 100, the top 100 tech companies. But if you're looking at US 500, it's the top 500 companies. So it's much easier dealing with the first two compared with this one. Now, this is just an index. This is I usually use it to see where the markets generally is headed to. Like long-term direction, yes, it did respect the Fibonacci region between the 50% and the 61.8. I do believe this was last week's analysis. Use it as a confluence. Remember, the purpose of analysis is to prepare as many arrows in your quiver as possible. It's much better going to war with the 10 arrows compared to one arrow. It doesn't mean that you're going to use all the 10 arrows, but for sake of mind, you'll be much more confident executing a position whereby you know you have data backing you up. Stay safe. Have a peaceful week ahead of you.